Welcome back, folks. Well, for the market, as of now, the Nifty is still down 157 odd points. The Bank Nifty is down almost 580 points and not looking good at the moment. But let's talk about the gold financing space now. Lenders like Muthoot and Manappuram Finance have seen their customer base decline over the last few quarters as customers are shifting from NBFCs to banks. To get a closer look at what's playing out and what is being done to gain customers in gold financing, we are joined by VP Nandakumar, the MD and CEO of Manappuram Finance. Mr. Nandakumar, thanks a lot for joining us. You know, this is the big debate, right? Customers are now shifting from NBFCs to banks for whatever reasons. And that perhaps is the reason why your industry is seeing the customer base decline. What do you see as the long-term sustainable solution to that?
See, I don't see the customers are moving from NBFCs to banks. Rather, what is happening is NBFC customers, mostly from the lower end of the pyramid, their demand has come down because of the post-COVID. The post-demand, their demand was started picking up by the time they were hit by the COVID pandemic and prolonged lockdowns. This has really impacted their cash flows, their businesses, etc. There, the demand has come down. It is not because of the shift from NBFC to banks. It is not like that.
Mr. Nandakumar, actually, the factors that you're describing, demand should have gone up, right? Not down for credit. Because these are all events which caused a fair bit of pain overall to the segments of population you're describing. Gold loans are one of the quickest and easiest ways to get credit.
So I think it is a mistaken understanding. You see, the demand comes mainly from because of their activities are going well. They need cash, working capital, etc. Then only the real demand from these sections. What I mean is those engaged in cottage industries, those engaged in farming and allied activities. See, not only in gold loan, if you take the example of two-wheelers or this used car, particularly in the lower segment, the demand has come down. So that segment is what our gold loan segment is. So see, the large ticket borrowers who wanted to borrow for a longer time, yeah, they have been historically the bank customers, whereas the lower end of the pyramid where the ticket size is below 1 lakh and borrow for an average period of, let's say 3-4 months. They were typically the customers of an organized sector, and they are now our customers. So that segment is yet to pick up. It is started slowly picking up, but it has not come to that pre-COVID level. It is still lagging. We hope things will improve in the coming 2-3 months.
Mr. Nandakumar, good morning. But so at the end of the day, your gold AUM growth has been quite weak. So if you could give a guidance on that, and to sort of get the customers back, what are you doing? Is teaser rate going to be back in action, perhaps?
See, it is. Their overall demand depends upon the economic activities in that particular segment. There we see the sluggishness in across all the segments. So it is where it has come down. And see, when the economy picks up and the activities there also increasing, etc., it will come up because these people mostly borrow for in the farming season, like sowing season, or school reopening season, or functions at home, marriages and other functions, etc. These are gradually picking up, and the demand also we see gradually increasing.
So, your customer base, just to get it down, drill it down to specific numbers, right? By the end of FY22, your customer base had gone down to about 24 lakhs. You used to enjoy 26, 27 lakhs as well in the last few years. Just want to understand whether there will be a further fall in terms of absolute numbers, and is there anything that you're doing to gain customers in gold financing?
See, as I told, yes, it is because the demand was down. It is slowly improving. So our ticket size is average ticket size is around below around 50,000 rupees, and the average borrowing period is around 6 months. So these customers, for the last one or two cycles, they didn't need money. They didn't come, and when these activities restart, they are bound to come. And because of the activities, we see slowly improving. I hope, yeah, from here it will pick up and come back to the old level, and further from there it will go up.
Right, Mr. Nandakumar, could you tell us what will gold loan growth for you look like in percentage terms? And will you rely on new customers coming in, or sort of existing customers? What is churn, etc., going to look like?
See, usually 80% of our customers used to be repeat customers. Some 15 to 20% used to be new customers. New customer acquisition is happening regularly. Only from the existing customers, there is some sluggishness in demand. So what I look forward is in 1 or 2 quarters, the numbers will come back. Both growth will come back. Yeah. So there is no decline in portfolio. Yes, it is seen as flattish, and yeah, we have seen some decline in the past. It has come to a flattish stage, and here onwards, we feel like it will slowly grow. This year itself, we expect from that stage to a growth of around 5 to 10% this year. Next year, our usual growth of 10 to 15% will be achieved. This is our expectation.
To 15% gold loan growth?
Yeah. That is in the next year, and this year I expect that to grow by around 5 to 10%.
5 to 10 this year and 10 to 15 next year, FY24.
Yeah, this used to be our normal growth in a normal period.
Sure. Should we, are you lending more to existing customers using new collateral? Should one be a little wary about that? I mean, not just you, but the industry. Because of, stress or whatever?
No, it is evident from the fact that the demand, the average ticket size has not gone up.
Okay.
Average ticket size remains the same. It is not because of that.
Okay. Also wanted to ask you about the MFI book. There is quite a bit of pain over there, but going forward, what is the outlook?
Yeah, our book is relatively better, it appears, because from the SFO, the SRO data, what we understand is the industry, the NPA is higher, PAR is higher, and ours is seen lower than that.